Good morning, everybody. It's Dan Basse and Ben Buckner coming at you in this Tuesday, the 1st of July. We're finally in the July, Ben. Can you imagine that? We're beyond that USDA crop report that came out yesterday that we were all discussing for most of the last couple of weeks. As Ben will show, the report showed us a lot of nothingness. The trade did very, very well in getting it, and we didn't have big changes in acreage, nor did we have big changes in stocks from prior expectations. So the surprise really came out in condition ratings that came out late yesterday. Those condition ratings showed 73% of the U.S. corn crop rated good to excellent. For those of us that love data, and I'm one of those people, when you model this out and start to look at what it means for the corn crop in terms of a yield, it gives us something between like 184 and 190 bushels an acre. Now that's a big, big range. We can drive a truck through that, and the R squared on that is only 0.36, so not a lot of reliability. But as we take these crop condition models into August, they start to have a lot more reliability. So it's still weather over the next 2 to 3 weeks. We can look into the middle of July, and that weather looks relatively good, non-threatening for the Midwest corn and soybean crops. There may be a little too much rain across the Delta. There's some issues down there with additional rain, maybe in Tennessee, or as we look at places like Arkansas. But in a broad sense, rain makes grain, and I think that's what we're up against, Ben. So take us from there and give us a highlight. But the corn market made a new contract low overnight. December corn at one point down 8 cents at 417.
Yeah, throughout the last several weeks, there's a lot going on, from geopolitical issues, expanding conflicts, to expecting maybe a surprise in the stocks and seedings data. But it's really been kind of back to basics has been one of our themes. And so it's really been weather, I think, has been the driving fundamental force in price discovery. And, the last couple of decades, one of the features of the analytical community anyway has been, getting stocks and seedings numbers incorrect. We've been through periods where you can miss those numbers by 5 or 7%. It's hard to forecast residual use. But yesterday, I think the surprise was how well the trade had done in estimating corn stocks, especially. And that really, when we model out reactions to the report, corn stocks has really been the driver of price action on report day, maybe the week after. So you can see here kind of the completed crib sheet, and the trade was within 0.1% with relative to their estimate compared to actual June 1st U.S. corn stocks. And so the report was kind of a non-event. Very, very quickly, I think we went back to weather. And then just waiting, a couple of hours to get that crop progress report. So again, no major acreage surprises. We're kind of left with what we've got close to the intended numbers, and no surprises in corn stocks and soybean stocks. A little heavier than the market thought, and so I think there will be steady to upward revisions in corn and soybean stocks within the USDA's July WASI. Not terribly meaningful though. So it is all of a sudden just back to looking at U.S. weather, and it has been very good. And I think the idea behind those models that project, up to a 185, 190 corn yield is probably just the locations that are participating in very, very good growing conditions. It stretches from almost western Kansas, Nebraska into Ohio, Pennsylvania, where you've got moisture today at or above averages when we think about percentage and ranking percentiles. That's what you see on the right here. On the left, you have just 5-day rainfall accumulation. So I think what's important is that we've got Nebraska, Kansas, South Dakota participating this year in above trend corn yield potential. And one of the drags on corn yield the last couple of years has been there's always been some pretty large, important region experiencing drought. And so you just can't cross that 180 bushel threshold. But this year seems to be different, at least so far. So the only problem area is kind of a very small sliver stretching across the Wisconsin-Illinois border. Everywhere else looks really, really good or adequate for soil moisture as we get into pollination. And so it kind of explains what we've seen in crop ratings. I think that was the big surprise. I think over the USDA's stocks and seedings data, it was the corn crop rating. Like I mentioned, 73% above average versus 70% the previous week and 67% last year. Counter seasonally higher. It is almost clockwork. You get your highest corn ratings of the year every year, kind of in the first 3 or 4 weeks of the growing season. It's not the case this year. It's been going up from late May. I think that's important to note. So you start to compare last year, this year, it starts to look kind of special. Key growing condition of season ahead. But again, it doesn't look like there's going to be any major threat to that pollinating period. Soybeans, 66% good, excellent, unchanged from last week, down 1 point from last year, but about 5 points above average. So again, you start to, not today, but maybe in 30 days, model out soybean yields, and they're going to be at or above trend, I think, pretty easily. So again, if the runway is kind of getting shorter in terms of a U.S. weather problem developing, and in the case of corn, if you go another 2 or 3 weeks, you probably avoided a lot of issues. But that's, I think, the message this week. It's not stocks and seedings, but it's that the corn crop is rated very, very highly, the highest rating for this particular week since 2018. So again, potential is there. So spring wheat, a little more middling, and this is really centered on Montana. So spring wheat's 53% good to excellent, below average, well below last year, 72%. Montana's 2% good, excellent. North Dakota, Minnesota, kind of 65% or better good, excellent. So I think that any issues with the high protein wheat market may be regional in nature. And the guys that we talk to also say things look pretty good and are on track, at least in Canada. So I think that cross-border trade will solve any potential supply issues in the high protein wheat market, at least for the next 3 to 6 months. So again, I think when we kind of identify the biggest risk in the marketplace, and it will be nuanced over the next year, but between now and September, October, it does look like the market's just got to sort out, most likely, pretty large supplies of almost everything. And so that, I think, is what we're thinking about in terms of risk management for the farmer, especially. Looking at the next 10 days as well. So we've got soil moisture adequate to surplus almost everywhere. Rainfall in the western Midwest still incoming. Eastern Midwest gets a little drier, but it's the temperature, I think, that the corn market faces in terms of risk. And we don't see a lot there. It has been getting warmer, but what you see here is the maximum temperature expected to be recorded over the next 10 days. And you've got some low 90s in the eastern Midwest and parts of the far western plains, but otherwise kind of capped in the mid to upper 80s. So I don't think we're going to have a lot of real stress as we get into pollination, which we think kind of peaks in the next 2 weeks, maybe 16 days. Iowa's 85% good, excellent, and 3% silking today. So again, thinking about the time is running short, I think, to really develop a big weather problem. So I think that's the key. We're trading weather today. We're not really trading much of anything else. And the nuance, the debate, those yield models are going to come fast at the market over the next 30 days. And so again, is this a very special corn year? I think is going to be the big question for the market for the next couple of weeks.
Good rundown, Ben. I would agree with you totally. This is one of those years in which the corn crop's doing very well. How big is the question, and that's something we'll be trying to answer here on these videos in the weeks to come. But looking forward, at least until about the 15th or 16th of July, it looks good. That means we got another 2 to 4 weeks of weather to pay close attention to. Corn's a crop of July, soybeans are a crop of August. We all know that, and we'll see how this all comes forward. But I have no problem talking about above trend line yields in both corn and beans, and I think that's what the market's looking at, and will continue to look at going forward. Any closing comments, Ben?
I think so. Yeah, it's the yield debate, I think, is in full force now. And again, having gone past the stocks and seedings data, no surprises. It is, whether you're bullish or bearish at these levels, it is all about yield potential and the weather and the fine-tuned details therein. But again, things do look good too.
Yeah. For now, we have a supply-driven bear market. We'll see if we can get into a demand-driven market later the fall. But I think first we got to decide what crop size are, because end users have their hands in their pockets till then. Good rundown, Ben. Everybody have a good trading day. Of course, you can get a trial of our service here for $1 for the next 30 days. Always encouraging people to do that, to see our exact recommendations and how we do. Be well, everybody. Have a good day on Tuesday. We'll be back tomorrow.
Bye-bye.